So thank you for joining us today and taking a few of our questions. Let's begin with a brief introduction of yourself, your role, and about your company.
Sure, I'm Kevin Flynn. I'm the Chief Financial Officer of Ecora Resources. I've been with the business now for 12 and a half years, worked through a number of our key strategic challenges in that period. But ultimately, Ecora Resources at its hub is a royalty and streaming business that looks to provide investors with exposure to energy transition commodities, but through the royalty model, which basically means you get your top line exposure. You don't have to worry about individual operating margin pressures, capex blowouts, etc. And the nature of the royalty model as well, as an investor, means it's naturally diversified as it's a portfolio business. So you get diversification of commodity, geography, and operating businesses as well. So we like to think of it as a de-risked way to gain exposure to the natural resources sector.
As a participant in the Nordic Funds and Mines Conference, what are your key objectives for attending, and how do you hope this event will contribute to your company's goals in the current mining landscape?
Yeah, it's a good question, because I think fundamentally a conference like this in a jurisdiction like this is very much aligned with Ecora's values. You know, we like to have a geographical footprint in jurisdictions that primarily categorize their natural resources sector as a key economic activity. That's very much representative of our asset footprint, and Sweden in particular, and the Nordics generally. Within Europe are very active in this space. I think it's always great to get out and meet potential retail shareholders, family wealth offices, and it's a good event to bring everybody together and hear the story for the first time, and that's very much what we enjoy doing.
With regards to the miners and the investors that you work with, and in light of recent geopolitical tensions and supply chain disruptions, how is your company working to ensure resource security and maintain its competitive positioning in the market?
Yeah, I think as a royalty and streaming business, I think we're less exposed to that dynamic. I think what we see currently is we see a lot of small, junior, mid-cap companies really trying to advance their projects. But in an environment where the equity rating for those businesses is very, very penal for them. And therefore that opens up a breadth of opportunity for royalty and streaming finance. And we're seeing plenty of opportunities to continue that investment growth to add to what we believe already is a very compelling royalty portfolio. I think for us to enhance and facilitate supply of critical minerals, particularly those that are probably less dependent than on the Chinese processing end market, I think is very important. And we're partnering with some players in this space currently who are being funded by the US government, for instance, in order to secure their own supply of critical minerals. So it's nice to be a partner to some of those initiatives.
With the ongoing focus on ESG within the mining industry, how are you leveraging this conference to showcase your company's initiatives to the Nordic investment community, known for its strong emphasis on responsible investing?
Well, I think if you look at Ecora's portfolio, for instance, you know, and our thesis is to be an energy transition royalty and streaming business. There is no point providing that business model if you're then going to ignore solid ESG credentials in the projects you then invest in. So if you look at the projects that we've partnered with to date, 96% of those are in OECD jurisdictions where you can't operate anything but ethically. You know, the counterparties that we're exposed to, large public entities who are very transparent in their initiatives. So it's just the quality of the portfolio and the way we're providing that energy transition thematic really speaks volumes for itself in terms of ESG.
Recent industry reports suggest that the mining companies are facing increasing pressure to integrate their technology and address cybersecurity risks. How is your firm approaching the digital transformation and cybersecurity into its portfolio for royalty and streaming assets?
Yeah, I think that's an interesting one. We're less exposed because we have less ability to influence management decision making. Royalty, once invested, is a reasonably passive investment in terms of the capital structure of the business. However, key for us is our diligence at the time of investing, and that will cover a wide range of issues, not least controls, management quality, the management team itself, the location, the jurisdiction, what they're required to provide in terms of their permitting application, valuations, etc. So all of that diligence is done in-house to front load effectively that, because once invested, we've very little means to influence afterwards.
And you touched on this briefly, but with the growing focus on critical minerals for the energy transition, how is your firm positioning itself to capitalize on this trend? And are there any particular commodities or regions you are targeting for future acquisitions?
Yeah, absolutely. I mean, our portfolio at the moment is very heavily weighted now towards copper. We've got the leading copper growth profile of any royalty and streaming business globally. Copper is going to play a vital role in energy transition. We've got good exposure to cobalt. A lot of cobalt comes from jurisdictions that have traditionally, had questionable providence. Our cobalt comes from Canada, operated by one of the best producers and lowest CO2 emitters on the nickel cost curve. So a lot of what we do is very much based on the investment point at which we make that, very much driven by ESG, very much driven by jurisdiction providence, etc., because we're entering a world, and we're going to continue to enter a world where people and end users will want to know what their component is made of and where it's come from.
Absolutely. Recent reports show that the mining production costs have increased significantly over the past few years. How does this trend impact your firm's investment strategy and the performance of its existing portfolio?
Good question, because one of the things I think we're most proud of at Ecora with our portfolio is that 84% of our portfolio is in operations that are either on the first or second quartile of the cost curve. And this in its own way is really important for us, because as you invest in some more niche commodities, it's important that your investment endures even at cyclical low points, like what we're seeing in the nickel and the cobalt sector currently. And that's very much the case with our ongoing producing assets. I think the inflationary aspect of what's happening in the wider industry, Ecora provides you a degree of a hedge in relation to what's happening further down the chain, because your exposure is at the top line. So you don't have to worry about margin compression, because we derive our revenue from the top line sales process, and that really is our USP as a royalty and streaming business.
Right, and onto that, as a royalty and streaming business, what are some of the most pertinent risks and opportunities that you're seeing right now within the mining industry and in the global market?
Yeah, I think some of the risks that we're seeing at the moment very much is in relation to some key projects gaining the financing required and the permitting to advance their projects. At Ecora, we're an important part of that capital structure in order to advance certain projects that we fundamentally believe are very important. A good recent example of that, we financed Rainbow Rare Earths Palabora project in South Africa. And this is not a mining operation, it's a residual gypsum stack, which will be processed to extract rare earths and basically then remove gypsum stacks from the eye line. So very important local buy-in. I think that's where your diligence really screens are very important in terms of, does the operation have good local buy-in, a good social license to operate? And I think those are the projects that ultimately will continue to be very successful, and the ones we specifically target and screen for at Ecora.
I appreciate, again, you taking the time to answer our questions, and hope this event and this conference has been fruitful for you.
It's been amazing. Thank you very much.
Thank you so much for your time. Thank
Excellent.
you. Much appreciated.